Make no mistake, the reason most people get into the hedge fund business is not to do good with the money that they might earn. We do tend to do that because it is ridiculous sums of money you can earn, not everybody. It's numbers like this you get in because of the money, because you get compensated for your efforts to a disproportionately ridiculous amount. Does that mean you turn it away? No. Will you do something useful with that capital? Hopefully. They're some of the most generous donors in the world as far as individuals go, or even institutions go. My favourites on this list of hedge fund managers: John W. Henry, because he's a big investor in the UK. He happens to own Liverpool Football Club. David Harding, because he's British. And Man Group, because they're British. But the others I think are all extraordinary. And what they've done is incredible. They're all professional hedge fund managers. What do they do? Well, here's a slide from one of them, David Harding's Winton Group. It's a slide taken from what they explain to their own investors they do. So it's not my slide, it's theirs. What all of them do, the ones that I just mentioned, is they're trend followers. So they get in after a bit of a lag, which shocks people. They think that these hedge fund managers can see into the future. It's not the business they're in. Or that they know the exact precise moment you're at the bottom, because after all, somebody on TikTok could do that by drawing lots of lines what the bottom and the top was. Not so. What actually multi-billion-dollar hedge funds do is they buy after a lag, they sell after a lag. Why? Because they can't see the future and they're riding the coattails of trends. If you want to learn more about what my industry does, or a large chunk of it does, have a look at the links in the biog, and I've got a lot of free information and education on there to explain it to you. Thank you.